Thursday, June 27th, Stan Ehrlich, market and analysis. I start out with the stock market indexes, S&P affiliates, DIA affiliates, and the QQQ, NASDAQ affiliates, and go to futures contracts. So the E-mini this morning is just barely higher. We have a significant situation in progress. When the E-mini does get lower on the day, which could be any split second, and if it stays there, which is not done, it was unchanged a moment ago, this 0.25 green means it's up a tick. And if it turns red, it'll be down a certain amount. So I have it on all my charts. It tells you the net change for the day since the previous close. This will turn red, the bar, because of the ER signals. There it did it, right there. Strategy, automation. The moment it's red, it is qualifying for a bearish engulfing ER sell signal. If it closes lower on the day, we have a finished, not necessarily in limbo like at the moment, signal, but we could have a third bearish engulfing if we simply close below yesterday's low. We have been overbought in the last few days. That qualifies. We have a higher high today than yesterday, a lower low today than yesterday, therefore an outside trading range day. Engulfing, that qualifies. All I need is for it to stay lower than yesterday's close, and bingo, we have a third red sell signal maybe happening in front of our eyes at the moment. Let's take a look at the very short-term chart. This is the 5-minute E-mini. We did enter a new short signal because of the bearish engulfing on this 5-minute chart. It is losing a little money. We are very close to getting stopped out, and it will be a losing trade or a scalp. Now, the position for ER1 trade will more likely than not stay short unless it makes a new high for the day. Then it'll get stopped out. But if it doesn't make a new high for the day, it'll stay overnight. We'll see what happens in the days to come. As I've been saying, I think the indexes as a group are on the way down a fairly significant amount. It might, and I hate to say this so early here, in very early, almost July, next Monday. This is Thursday. So you get July, August, September, but October, 4 months from now, should have another low like the last several years. You know, that October low is approximately 90% has happened 90% of the time in the last 30 years. I think it's 32 years. Wow. The last few have been spectacular, not to say this year's is going to be good or bad. Anyway, we just almost got stopped out, but not quite on this trade. Let's go to the next chart. I may be out of this, and we'll know it soon. Spider has two sell signals, one on the highest high, one a couple of days ago. Has not yet totally violated the bearish engulfing ER sell signals. I need a turn down. The Spider at the moment is a little bit, half a point higher than the previous day's close. No big deal. It could have another bearish red engulfing if it were to get below yesterday's lows, which it has not done so far. So we need a pretty sizable break on the downside in order to do that. Let's see, let's imagine what that might look like in other indexes as we go through them here. So today we opened on the Spider in this ballpark area, came up, made the high, went back down and did make a lower low than earlier in the day, but not below yesterday's low, which is way down there, 543. So today, 44.5, we need to break today's low by approximately $1.50 plus in order to have a bearish engulfing, which we will if it happens. Right now, we're struggling on this rally. Looks like it might be topping out. I hope so, then I won't get stopped out of my other trade. So resistance level stopped it early this morning. It goes back several days. That's nice, not great. What about the QQQ? Sell signal on top. All of these indexes have a bearish engulfing sell signal on the top so far, period, except for the Russell. Okay, the cues. Next, there's the signal. There's the day trade scalp on the R1 on the signal day, the 20th of June. Position trade is not showing, but probably got out somewhere in here as it started to work its way back up. I'm guessing probably during the day on the 25th. Okay, so we are more likely than not trading a little bit higher than our previous position. ER1 position trade lasted 1, 2, 3, 4 days probably. And okay, we're trading higher than where that offset was, and it was a profitable one. So although my personal opinion is that the market's rolling back down again, you can't really prove it with the way we're out of shorts and we don't have lower lows yet. We have higher highs, and that's in the last 2.5 days, short term, very short term. This is very important. Tomorrow's Friday, the end of the week, and then we have some holiday next week. Next, natural gas. I'm sorry. NASDAQ, sell signal on the top, bounce back up, is an outside trading range like the E-mini, and currently up 30.75. If it were to turn around and go back to lower on the day, it would have a bearish engulfing ER sell signal again. Now, this one did not work. It might have led to a small profit on the scalp trade. Maybe not, but let's just say it didn't work. Small losses. This one did work. Dropped down very nicely for a couple of days. I actually should have put a darn circle around that. I don't know why I didn't. And now I will. There we go. Make a little adaptation to the size. Very good. So we have had four in the last, month period on the NASDAQ. Each one of them offered a little or maybe a small loss, opportunity for profit. This is very nice. This was probably not. This has been very good so far. I still think it's going to make new lows, maybe as quickly as before the close tomorrow or early next week. I guess maybe we're waiting for the debate to happen. I don't know. I'm not a fundamentalist. I'm a technical analyst. Next chart is the NASDAQ 5-minute up against some resistance in the last 2 or 3 days. Has not quite gotten as high as another important resistance level, allowing for a little bit of a rally here, but I hope not. Next chart, NASDAQ daily data the DIA, and it has not a bearish engulfing on the 20th of June, but it's got a double top formation with an ER sell signal on both exact rally highs, April 1st and on May 20th. Plus, we have a buy signal on the exact low day between those two highs. Wow, all three. If this double top formation, which is what I'm calling it, works correctly, and it is going sideways to a little bit higher, a little longer than I would have expected, but it hasn't ruined the formation. It needs to start making lower lows for several days or a week or two or a month plus, and then drop off even to lower ground, breaking out of the formation at about 37.890-ish. And if we get on a closing basis below those numbers, we'll have a downside objective as low as 35,079 or more. The short-term chart on the YM 5-minute chart has a good resistance area, bing, 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 and then drop through it. Now we came close to it, but allows for a little bit more strength and then turn down. So I think we're close to some turns down, and if not, I'm going to end up changing my mind. I go with the flow when I have to, even though I've been wrong. I will turn around and be on the right track again. Russell, nothing going on of any consequence. Major 2-year resistance stopped it again back in May. And we're at the end of June here. So, 6 weeks ago. And actually, the high day was May 15th in the middle. Yeah. So I think it's going to make a new low and probably come off to about 1950-ish. The short-term 1-minute chart on the Russell simply shows a little resistance formed earlier today is stopping it again. I need to get below here to think that it's going to continue a lot more, but we really need a a lot here to impress me that the next few days might be straight down. Okay, bonds. It did and does have a double top, very small, only about 2 weeks in duration. The breakout was yesterday on the close, and today the follow through is creating over half of the minimum small downside objective, which is going to be 117.22. Near the bottom of this support area in yellow or gold, which we were bouncing off the top of so far today. And remember, I am not bearish on bonds, and I've said that for many months now, actually probably since this gigantic buy signal on the bottom in October last year. I said that all the downside corrections are probably going to stop and higher than these levels, and I'm looking for a long-term market to begin. What I don't think I figured out was that this was going to be quite a big drift down in a downward slanting channel for as many months as it did do. But now I'm pretty sure we're on the way up. We had a couple of failed sell signals. They actually did work a little bit. And now this double top doesn't produce much of a bearish objective, but you almost got a little upper slanting channel at the moment, sort of. We'll see. What about the notes? Bear signal didn't work. For a day and a half, it did. It was a great scalp on that thing. It got short way up here, just under the low of the previous day. That was June 7th, the sell signal. Now, any higher high didn't have any follow through, drifted back down 2 weeks ago, and then slipped into new low ground yesterday and today. So that looks like it's going to zip off a little bit more, slip off a little bit more to 109. I wouldn't be surprised to see 107.30 down to 107.15 challenged. Next, crude. Trouble at the top of this resistance area, or actually a little bit above the high of it. Not sure that it's drawn as accurately as I'd like. Yeah, okay, fine, no problem with that. And we are currently trading like it is still struggling to break out, which it has done once on a closing basis on the 24th of this month. All the other closes have been below the high of the range, that's this rectangle, even though it's poked its head above during the day, the top of the resistance level. Now, here it is above again, the second highest close if it stays here, and looks like it did make a higher high completely, but not holding on to it. I don't know. This is to be watched very closely. Natural gas, double top, about to break out to the downside. It looks like we need a close below 2.646, the low on the date of May 31st, which we are extremely close to. Everything else has stopped the rallies. We have the double top formation. We have a minimum downside objective and new low ground for quite a while on natural gas. A long-term bear market continuing, and I would love to point out that there's a sell signal on the very top, August 23rd of 22. Yay! A buy signal right there in green. Yeah, buy. No, that's a buy. There's a sell, and then some minor signals. That one's great. Sell signal on that. That buy did not work. Last sell, I don't know. Not getting any great ones at the moment, but historically, we picked a major turning point quite a while back. So I'm looking for a new low. Next, heating oil. Popped up to and through and touched the top of this resistance area that I've had sitting here, as you know, watching the program for quite a while. Stopped it. Now we're trading barely above where we opened, and we have a resistance area stopping the rally. We are not quite overbought, but so close. The RSI high today has been 74.72. I need 75 or more, which we got on the sell signal on June 21. That is why the RSI is red itself, or green when we get buy signals, and green right here as well. Now, I think we're about to roll over and start to slide down. Energies south. Next, gold. Testing support, not making a lower low, looking very close to doing so earlier today. Right now, after testing support and not making a lower low, we are higher than yesterday's high. It is almost a bullish engulfing, not quite, but support 2 days in a row held very nicely. Okay, I can accept a little more strength on gold short term, but the bigger picture is the double top formation. We are trying to break out of that double top and not successfully. June 7, June 10, and close on June 13, but very accurately yesterday and today, not successful on breaking out. You close below today's lows, you're going to close below yesterday's lows. You're going to close a new low ground since April 3rd. Very significant breakout. And I expect it to happen very soon, next week, maybe tomorrow. Silver, head and shoulder top formation. I've had for several days now this green circle, the middle of which I was expecting, hoping for, looking for a rally high to occur at 31.54545. Pretty much exactly to the date and price. Excuse me. We had topped out 2 days earlier than I expected and a little bit lower than I expected at 31.21 as opposed to 35.5. Sorry about the cough. Now, on the 24th, well, actually on the 21st, bearish engulfing, a key that we might have had the shoulder a little quicker. We did. Dropped off a little bit more the next day after a big reversal day, the previous day on the 21st. Now on the weekend, on the 24th on a Monday, this Monday, we have a little bit of more of a down day, no big deal. But on Wednesday, we broke the neckline, this yellow line below the lows of the formation, and it's a breakout. Closes on its lows. There's a new low close for weeks, almost in total new low ground, which I think we are trying to resolve that question mark. We need to close totally below all previous lows to drop off much faster. And we're bouncing very slightly at the moment, actually dead unchanged, 0.005 up, nothing. And I don't think this is going to end up being a bottom. I wouldn't mind a rally I can allow for up to about 30, but that's back up to the neckline, which is not uncommon. And it could take a few days after the original downside breakout on the 25th. I'm bearish. My fail-safe is not getting above 30. Too bad we didn't get any signals involved in the top formation, but it's a great formation. Next, platinum. The same circle and the middle of was at 1,028. And I drew that a couple of days before this Tuesday, last Tuesday. And the reason it was on the 25th is because if you look at this yellow line up here, it is a certain distance from the top of the platinum market, which is an ER sell signal on the damn high day, damn. That's why I built the trading system to pick major as well as intermediate minor turning points, and it's wrong sometimes. So that's a whopper so far. But that distance, the yellow line, is the same distance from the highest high to the left to the previous shoulder high. Put it back where I want it. Shows you my timing shoulda, coulda, woulda been Tuesday. And the price level for the first shoulder was right here. I should actually be raising this time price-wise, sorry. The exact middle of it's going to be exactly on the previous rally high right there. That's the middle. I missed by 1 day. It went higher than my price expectation yesterday and dropped today dramatically. So I overshot slightly by 1 day and a little bit of price. That is awfully close to being dead right. I'm happy this happened so far. We are trading about low and last. We're down 31.4. We are close to making new lows for the previous 3 days. I think it's going to happen soon. This is a head and shoulder top formation. The neckline is down there because we have the continuation contact making adjustments for it. And I'm going to leave that. Timing is still the same. That didn't change. Bearish engulfing, circle around it, raise it up a little bit. That's perfect. Okay. So I'll draw in the downside objective and price-wise in the days to come, starting probably tomorrow. It's substantial. The top of this market was 117. The neckline break is going to be 970, 30, 5, 940-ish. Yeah, in that ballpark. Maybe even a little lower. Next, high grade. New lows. Chewing into support level. Not quite oversold. Got elbow room to get down even lower. I think it's going to. This resistance level, raise that up a little bit, was tested, broken on the way back up, stopped, and dropped to new lows. Not bullish. Looking for lower levels, probably down in the neighborhood of 3.98. Yep, that would be great. 4, around 4.0. Next chart. Soybeans, meal, soybean oil, meal, corn, wheat, then cattle and hogs were done. So this is a long one today. Beans, now starting to break support. Now starting to, not super aggressively, but there's no reversal. We're down 11. It's a new low. Looks like it could be, very well might be, a new low close. There's nothing showing that it's trying to turn around yet. I'm not even oversold. I'm afraid this looks like a major bearish long-term, I repeat, major bearish long-term potential breakout. I'm a little surprised it's not going down much faster and much bigger decline, like half a limit down or something like that. But it's not. Maybe because it's fairly cheap historically already. But this is not good. This is not showing a reversal. This is basically bearish, very bearish. Price action. Look at how long it's been since we've been down at those levels. I'm telling you, January of 22. We are in new low ground right now and have been today since January of 22. Next, soybean oil. I much was interested in finding out whether this head and shoulder bottom, a 2-year pattern, too big in my opinion, was going to work or not. And now I'm slowly being convinced that it's not. Looking at beans a moment ago tells me it's probably going to drag meal and oil and maybe corn or wheat with it down. We have no particular bullish engulfing, no particular buy signal. The support area is working, but not very well yet. There's no real rally out of it. I need to close above 45.13 in order to get interested about the long side. I got new lows for a few weeks, a couple of days ago. This is nothing today so far of any consequence. You could call it maybe like a triple bottom. They don't work usually. They're very, very rare, the ones that end up working correctly. So I think we're about to make it into new low ground. The support area is about to give way. I'm about to erase my lines that depict the shoulder levels and call it a long-term bear market, getting a new leg down, starting a new leg down. Meal, new lows for a few days, not new highs. Yeah, it's higher in the day at the moment. Not a big deal. Sorry, it's just been going sideways. So the dominant formation here is we pick the second high in a double top. Great. We've already broken out to the downside. Great. The rally highs, well, they went a little higher than you might expect, but not too much. And we're now starting to see tests of lows. Great. Since I'm bearish to 325.5. And I still expect it to get there. But with everything else I've been saying about the other grains, wait a minute, that may not stop. And we could very well test a major support area down to 306. And if that gives way, and we start closing below 306, you've got another major longer term back to December of 22 breakout. Can't help it. Got to go with the flow. You can never make the market do what you want it to do. You always have to move with it. Corn. New lows day by day. Fourth day oversold. No sign of it turning back up again. Not yet. And guess what? Today, corn made a low lower than all previous lows on this continuation contract going back to April of 21. I would construe this as a potential downside breakout in a humongous way, very long-term profound. We may want to stay here and go a little lower for a few days more, like tomorrow, Friday, and maybe into the first day or two of next week to be further convinced. But I got to say what I got to say when I got to say it, and there I said it. I have to be turning bearish on all of these grains at this point. What are my last hopes here in wheat? Well, actually, that's interesting. We do have a very good rally, 67 ticks, quite a bit, making highs higher than the previous 2 days, and it looks like a close equal to or maybe higher than the last 3 previous closings also. And its low yesterday bounced off of a previous support level very handily. So, and very accurately. Is this going to turn into a broader double bottom? We were very oversold, down to about 10. I would have to say, on the average, this would be a candidate. But, hey, does it have any helpers? Are any of the grains looking real bullish? Only if they dramatically turn around all of a sudden on all the other grains will I like this formation in wheat. I can't. Okay, it's going to rally. Okay, it might be a week or two. Okay, not very much. Then I think it's going to turn into a long-term bear market again. It has never yet fully, apparently, recovered from the beginning of the war, and that was early March of 22 when we had a bearish engulfing ER sell signal on the exact historic high day, March 8th, I believe, the top for a couple of years to come so far. Cattle stopped at resistance yesterday and today. Now currently down a little, 20. Not a key reversal. I'd love to see that, but it won't get below yesterday's low. I don't think we're going to have enough time. Doesn't look like it's very likely. So if it did, it would have a bearish engulfing red sell signal at the end of the day. I'm basically liking what I'm seeing. I think it's about to top out. We're very overbought at resistance. Keep your eye out on cattle going back down some. Not necessarily a lot, probably 182, maybe 180. Hogs, bullish engulfing yesterday and a double bottom with a buy signal on both so far lows. Wow, we may have done it again. That's the first low on June 14th. Granted, it's a very small 2-week formation. 1, 2, 3, 4, 5, 6, 7 days later, yesterday, we have another bullish engulfing, and the low is almost the same, a little lower than all of the previous lows. And I stress a little, that's why I'm saying it's a double bottom. My arrow is about perfectly level right there. So that low is a little higher than, and today's low is right on almost. That's it. We're going up. The middle of this formation is 92.5. The bottom, 86, almost flat. 6.5 cents, 6.5 higher. 99. My minimum upside objective would be about 99 on this double bottom on hogs. And that is it. Ladies and gentlemen, let's check the E-mini real quick. I did get stopped out. That's the name of the game. Discipline. Don't change your orders. We'll see what happens next. As you know, my opinion hasn't changed. I'm looking for this to turn around and start to slide. Not doing it momentarily. You guys have a great day. Mañana. Profitable trading to you.